You twist the key in the front door of a beach house you swore would be your safe investment. Salt air slips in through a hairline crack you never noticed before, and the wind outside has teeth, gray clouds dragging low over the dunes like a warning siren. You scroll your phone and watch the numbers glare back. Listings piling up, price cuts stacking, insurance bills swelling like storm surge. The porch boards creak. The ocean keeps rolling in, indifferent. And suddenly, the dream feels unstable, fragile, expensive. This isn't a distant, abstract housing headline. This is 2026, and along North Carolina's coastline, the market is unraveling in slow motion, one for sale sign at a time. In this countdown, you'll travel town by town as the situation turns from concerning to downright devastating. Subscribe to Coastal Market Watch right now, because the next 10 stops are a countdown you don't want to miss. And number 1 is where the real panic begins. Number 10, Carolina Beach, North Carolina. You roll in beneath sun-bleached palms and pastel cottages, where boardwalk lights once felt like a permanent invitation. Carolina Beach carried a reputation for easy weekend escapes and reliable rental demand. But in 2026, the tide has shifted, and the market is starting to show stress. At its peak in 2022, prices surged as pandemic-era buyers chased space, remote work freedom, and short-term rental income. This town became a just close enough alternative to bigger coastal metros, with demand fueled by low rates and constant tourism. Now the numbers are turning. Realtor.com shows a median listing price around $638,500, while local market pages show median days on market near 103, a very different tempo than the frenzy years. Listings aren't vanishing overnight anymore. They're sitting, absorbing reductions, and inviting tougher negotiations. Zillow-style home value metrics across the region have stopped climbing at the old pace, and sellers are learning that 2022 pricing power has evaporated. When days on market stretch past 3 months, carrying costs start to bite, especially if the home is a rental that can't stay fully booked. Source. The pressure points are clear. Higher mortgage rates, elevated coastal maintenance, and insurance costs rising on renewal cycles. North Carolina's broader homeowners' insurance hikes are adding friction just as buyer urgency cools. Source. As you leave Carolina Beach behind, the market doesn't look crashed, but it does look cracked. And the cracks widen fast from here. Number 9. Wilmington, North Carolina. You enter Wilmington with riverfront charm, brick-lined streets, and a coastal city confidence that used to feel bulletproof. This was the grown-up coastal market. More jobs, more amenities, more stability. In 2026, that confidence is fading as prices flatten and demand thins. Wilmington peaked in the early 2020s boom, when remote workers and retirees poured in, and investors treated single-family homes like bond replacements. The city's reputation for livability and proximity to beaches helped drive the rush. But Zillow now shows the typical home value around $406,802, and importantly, it's down 0.8% over the past year, a signal that the easy appreciation era has stalled. When appreciation stops, the whole speculative story collapses. Sellers anchored to 2022 expectations face longer timelines, and buyers arrive with calculators, not emotion. A market that stops rising becomes a market that starts negotiating. And once negotiating becomes normal, price cuts spread like humidity, quiet, constant, unavoidable. Source. The contributing factors stack up. Mortgage rates remain restrictive for monthly payments, and insurance premiums are climbing statewide with more increases proposed. That squeezes both homeowners and landlords, especially those who bought near the top and relied on rent growth to cover the gap. Source. As you move on. From Wilmington, the market feels less like a wave and more like a tide pulling out. Slow at first, then suddenly exposing what was never solid ground. Number 8. Brunswick County, North Carolina. Oceanfront corridor. You drive into Brunswick County and see the blueprint of the last boom everywhere. Fresh subdivisions, new signage, new promises. This area was marketed as the affordable coastal dream, a place where buyers could still get in before prices ran away. In 2026, inventory is no longer a whisper. It's a presence. The peak hit around 2022, when demand spilled south and developers accelerated construction. Growth stories multiplied, retirees relocating, remote workers cashing out of expensive metros, and investors stacking beach-adjacent properties for rental income. Now, Zillow puts the average home value around $400,388, and it's down 0.5% over the past year. Again, not a free fall, but a clear break in momentum. When you pair softening values with the kind of listing growth local market watchers track, like the thousands of active listings being discussed in area market updates, the shift becomes visible. More choices, less urgency, more bargaining power. And in coastal markets, time is money. The longer a home sits, the heavier the carrying costs feel. Source. The contributing factors are brutal and simple. Rates keep payments high, insurance increases add friction, and new supply creates a subtle oversupply problem in pockets. If demand doesn't roar back, the market doesn't correct. It crumbles gradually, listing by listing. Source. As you leave Brunswick County, the coastline starts to look less like a paradise and more like a showroom full of unsold inventory, quiet, glossy, and increasingly desperate. Number 7. Holden Beach, North Carolina. You cross into Holden Beach and the scene feels curated. Wide sand, low density, a hush that used to signal exclusivity. For years, this town was treated like a premium coastal bet. In 2026, the data tells a harsher story, and the market mood turns troubling. Holden Beach rode a powerful wave into 2022, when buyers competed for limited stock and vacation rental projections looked unstoppable. Low rates made million-dollar second homes feel manageable, and scarcity did the rest. Then the air changed. Redfin's housing market page shows a headline shock. November 2025 home prices down 39.2% year over year, with a median sale price around $805K. That kind of drop doesn't whisper, it screams. Even if year-over-year comparisons can be volatile in small, luxury-heavy towns, the signal is still brutal. Demand has cooled hard, and pricing power is bleeding out. When a market posts numbers like that, sellers don't just cut prices. They cut dreams, timelines, and expectations. Source. The factors compound: elevated borrowing costs, insurance and storm risk pricing, and the reality that second home demand is elastic. When budgets tighten, optional purchases get canceled first. And once fear enters the market, it spreads faster than any hurricane band. As you pull away from Holden Beach, the market feels like sand underfoot, shifting, sliding, refusing to hold shape, and the countdown is only getting darker. Number 6. Nags Head, North Carolina. You arrive in Nags Head with dune ridges rising like ramparts and rental homes lined up like a row of chips on a table. This place once felt like a sure thing. Iconic Outer Banks demand, steady summer crowds, and a national reputation. In 2026, the economics are tightening into something alarming. The peak years, especially 2021 to 2022, were a frenzy of remote work migration and vacation rental gold rush thinking. Buyers weren't just purchasing homes, they were purchasing income streams, assuming occupancy would stay permanently elevated. But rental performance is where the pressure shows. AirDNA's market snapshot for Nags Head lists about 64% occupancy with a daily rate around $527. That sounds healthy, until you realize occupancy isn't profit and coastal costs have surged. When insurance rises, maintenance costs inflate, and mortgage rates stay high, A good occupancy rate can still produce a bad cash flow reality. Add in rising competition from more listings and hosts, and the revenue per property starts to thin, not expand. Source property taxes add another weight. NAG's heads town tax rate is listed at 0.2320s, with additional obligations like beach nourishment mentioned by the town. In a world where assessed values jumped after revaluations, low rates can still translate into painful bills. Source. As you leave NAG's head behind, the market doesn't just soften, it starts to unravel, because the rental math that held everything up is no longer sturdy. If you're finding this data-driven analysis useful, like the video and comment which city surprises you most. Your engagement helps us continue this research. Number 5. Kill Devil. Kill Hills, North Carolina. You cruise into Kill Devil Hills under a sky that can turn from blue to bruised in minutes. The town is busy, iconic, and deeply tied to Outer Banks' identity. It used to be viewed as liquid, easy to rent, easy to resell. In 2026, the market stability is getting shaky. The run-up peaked around 2022, when buyers treated the OBX like a hedge against everything: inflation, city stress, even boredom. Demand stacked up and prices followed. But property tax pressure is now part of the story. Dare County's published tax rates show 0.2632 for areas like Kill Devil Hills outside, and 2025 revaluation results indicated massive increases in the county's property tax base. When valuations jump, even revenue-neutral rate adjustments still leave many owners paying more. That's a slow squeeze, one that doesn't show up in a listing photo but hits every month. Source insurance is the other vice. North Carolina insurers have requested large increases for dwelling policies, and beach territories have been explicitly discussed in county guidance. That means owners face escalating fixed costs right as buyer demand becomes rate-sensitive and cautious. Source. As you push south past Kill Devil Hills, the market feels like a bridge in high wind, still standing but vibrating. And the next stops? There where vibration turns into structural failure. Number 4. Manteo, North Carolina. You enter Manteo and it feels different. More historic, more grounded, tucked against the water with a storybook calm. For years, buyers saw it as the safer Outer Banks play. Charm, community, and less of the party town volatility. In 2026, that safety narrative is cracking. The boom years culminated around 2022, when even quiet coastal towns were pulled upward by the same forces: low rates, pandemic migration, and second home urgency. Manteo benefited from the spillover and the desire for authenticity. Then came the tax shockwave. Dare County's 2025 revaluation results show the property tax base increased dramatically, with the county highlighting massive value growth across jurisdictions. When the tax base jumps that hard, homeowners feel it, especially those on fixed incomes or those carrying investment properties. The market absorbs that cost through softer demand and tougher negotiations, because buyers price in every recurring expense. Source insurance adds another layer of drag. Proposed and approved increases have turned coastal carrying costs into a headline issue, and in a market where mortgage rates remain elevated, extra thousands per year can erase whole segments of buyers. Source. As you leave Manteo, the market feels less like a postcard and more like a balance sheet, and the ink is running. The collapse doesn't always roar. Sometimes it just tightens. Number 3. Hatteras Island Villages, North Carolina. You drive onto Hatteras Island and the landscape turns raw. Ocean on one side, sound on the other, wind pressing into the car like a physical force. These villages have always been both dream and risk. And in 2026, that risk is pricing itself into the market in a way that feels brutal. The peak was the pandemic-era surge, cresting around 2021-2022, when buyers ignored fragility and chased lifestyle. Remote work made distance irrelevant, and rental income projections made risk feel worth it. But insurance is the problem that doesn't negotiate. Dare County's own guidance on proposed homeowners, insurance rate increases spells out sharp increases for beach communities, with territory-specific jumps that can be staggering. When premiums surge, lenders, buyers, and owners all react. Deals fall apart. Listings sit. Sellers cut. And when storm risk and rising premiums collide with high-rate mortgages, the market doesn't cool. It hemorrhages demand. Source: the other weight is taxes after revaluation. County data has already highlighted huge increases in the property tax base, and that trickles down to household budgets. Source: as you leave Hatteras behind, the market feels like a sandbar at low tide, exposed, vulnerable, and one strong wave away from collapsing into the water. Number 2. Outer Banks Beach Territories, North Carolina. Insurance shock zone. You're still on the coast, but now the mood changes from alarming to severe. The same homes that looked like trophies in 2022 now carry a hidden countdown. Renewal dates, premium hikes, and lenders watching risk like hawks. In 2026, the insurance story becomes the real market story. The peak euphoria came in 2022, when buyers believed the coast was a one-way escalator. Demand was emotional, competition was intense, and the narrative was simple. They're not making more oceanfront. But North Carolina's insurance system is flashing warning lights. The North Carolina Department of Insurance published that insurance companies requested a 68.3% increase for dwelling policies, with a proposed first-year average increase of 28.5%. and a proposed second-year average increase of 30.9%. Even when settlements or adjustments modify outcomes, the direction is unmistakable. The floor is rising under every homeowner's monthly cost. That feeds directly into affordability, buyer qualification, and the willingness to hold second homes that don't cash flow. Source: ad and mortgage rates that remain restrictive. Freddie Mac's PMMS shows the 30-year fixed average 6.06% as of mid-January 2026. That's not cheap money, and it keeps pressure on payments. Source: as you push toward our final stop, the market feels like a storm wall offshore, dark, organized, and moving straight at the coastline. Number 1. Dare County Beach Communities, North Carolina, the breaking point. You stand in a beach community where the horizon is gorgeous, but the economics are devastating. In 2022, these towns looked untouchable. Iconic demand, prestige addresses, and rental income that made buyers feel invincible. In 2026, invincibility is gone. The market is facing a disaster powered not by one factor, but by a synchronized collapse of affordability. The peak was the pandemic boom, cresting around 2022, when buyers accepted any price to secure a slice of the Outer Banks. The forces were historic: ultra-low rates, remote work migration, and an investor stampede into vacation rentals. Now, the carrying cost crisis is the weapon. Dare County publicly details proposed homeowners' insurance rate increases with eye-watering jumps for beach communities, and that pressure lands on every owner at renewal. At the same time, the county's 2025 revaluation results show the property tax base surged, meaning many owners are budgeting for higher taxes on higher assessed values. When the fixed costs explode, the market can't hold peak prices. Buyers don't just negotiate, they retreat. Sellers don't just reduce, they capitulate. Source. As you leave. This final location behind. It feels like watching a sandcastle get hit by a rising tide, slow at first, then suddenly gone. The outlook is harsh. Until insurance and affordability stabilize, the market remains in collapse mode.